Bienvenue à tous. Welcome to Business Morning here on France 24. Let's start with a look at the main business stories in the world's newspapers. Mining firm Rio Tinto has rejected a second takeover offer from its rival BHP Billiton. This is in The Guardian in the UK. It says Rio Tinto's board, in an emergency meeting yesterday, said the offer at 3.4 BHP shares for every Rio share still undervalued the company. The future of the group is now left in the hands of its shareholders. As France's trade deficit gets worse, over 38 billion euros in 2007, French Trade Minister Hervé Novelli tells La Tribune about a set of measures to boost exports. Most of them concern small and medium-sized businesses. The plans also include tax incentives. Oil prices fall to $87 a barrel as U.S. fuel reserves rise to their highest level in 14 years. The Gulf News says U.S. crude went up by 7 million barrels last week. After breaking the $100 mark in early January, U.S. light crude for March fell to $87 a barrel amid fears of a U.S. recession. On this side of the Atlantic, evidence is building that economic growth in the 15-nation bloc that shares the euro currency is starting to splutter. Until now, Europe's top banker, Jean-Claude Trichet, has talked a tough talk on interest rates, refusing to cut borrowing costs to support growth. But as our business editor Douglas Herbert is here to tell us, his tone may change when the European Central Bank meets today. Doug, so tell us.
Trichet, let's be clear here, is still wedded to his overarching mandate. And what is that? That is to keep prices steady in a Eurozone where inflation is running at a 14-year high of 3.2%. Now, that's the reason why, as he's watched his colleague on the other side of the Atlantic, Ben Bernanke, slashing interest rates by more than 1% this year alone, Trichet has kept his sang-froid. He's kept cool. He hasn't done a thing. In fact, cutting himself out as a true maverick, he actually recently hinted that he could raise rates. Now, that put the fear of God into every trader and every market in the world. But what we're seeing now is, yes, there are signs that Europe is not disconnected from the U.S., that, yes, the U.S. subprime crisis can hit home here, and there are hard economic indicators showing this. We are seeing services in the Eurozone spluttering. They're at their lowest level in about 4.5 years. Retail sales were way down in the Eurozone last month. These are all signs that mean that Trichet is going to be hard-pressed to ignore the slowing economic growth and stick to his inflation guns. That translates into he'll be hard-pressed perhaps not to consider cutting rates, if not today, which no one expects, sometime in the spring.
It's highly exciting stuff. Currency traders then also anticipating some kind of a shift in the ECB's position.
Yeah, it's interesting. I mean, on the currency markets, the euro, we've been talking so much recently about the strength of the euro, and it's been a big Sarkozy theme and all of that. The euro's actually been easing against the pound, against the yen, against the dollar. There's talk now, it had almost been up to $1.50 a few weeks ago, about a month ago. Now it could be at about $1.45. Why is this? People are anticipating Eurozone rates could be soon coming down. When that happens, speculators tend to buy more currencies when rates are high, because it brings more return from them, more return on their investment. When you lower rates, speculators tend to want that currency less. They don't get as much on their investment.
So which currency would you buy if you had to buy a load of currency, Doug?
The Romanian lei, but I'll tell you why in another plateau.
I went to Romania. I got some really wild exchange rates. Fantastic stuff. What a country. Amazing. Douglas Herbert there with all you need to know about everything you'd want to know about business. There you go. Let's move on now to more of the stories making the headlines today. A more generous version of the economic stimulus package proposed by U.S. President George W. Bush has failed to find enough support in the Senate. Republican senators narrowly blocked the Democrat-backed plan, which would have provided extra money to retired people and veterans.
Extra money for millions of Americans living on Social Security and disabled veterans. That was the new version of George Bush's economic stimulus plan proposed by the Senate. It was meant to expand unemployment benefits and offer heating aid to the poor. But Republicans in the upper house of the U.S. Congress said no. On Wednesday, only 58 senators voted yes, 60 were needed to pass the bill. Originally, both the House of Representatives and the White House had agreed on a stimulus plan, getting the stage for a Senate debate. The plan was a combination of tax rebates and tax incentives for businesses, but over 20 million Americans with low income and special interest groups did not qualify. So the Senate decided to expand it, For the Republicans, it was too expensive, $157 billion compared to $146 billion originally. Most agreed that with a recession looming, time is of essence in kickstarting the US economy. Senators still hope to come to an agreement by mid-month.
Okay, internet equipment maker Cisco has announced a 7.2% rise in profits for the past 3 months, but it warned a slowdown in technology spending will dent its next quarter sales. The news is tipped to fuel concerns that technology firms will suffer in the US economic downturn. Well, just like everybody else, I suppose. Okay, let's leave the US and go to business in Asia for our daily update on business news from Beijing. Henry Morton is there. As the Chinese New Year begins, Japan hopes it will be a good one for economic cooperation.
Xinyan Kuai-le, happy Chinese New Year of the rat, everyone. And it's a year that the Japanese are hoping will see even stronger business ties develop with China as the US slowdown continues to threaten their economy. Japanese manufacturers now looking increasingly to other markets, and China proving to be a very rich vein indeed. The country becoming Japan's largest trading partner in 2007, helping shield the Japanese from those problems in the US. And it is those problems, the subprime crisis in particular, that's continuing to impact on the region as a whole. Hong Kong's monetary authority now saying bad loans could rise at some banks in the territory. The de facto central bank urging lenders to remain prudent and ensure that loans were being used for their declared purpose rather than speculation, even though the bad debt ratio of Hong Kong's banking sector is currently at a record low of 0.89%. We end in Australia, where BHP Billiton, the world's largest mining company, has raised its hostile offer for Rio Tinto to $147.4 billion as it tries to thwart a blocking move led by Chinese competitor Chinalco. If BHP's offer of 3.4 shares for every one of London-based Rios is accepted, it would be the second largest takeover in history. Those then, the stories that are making the business news here in Asia this Chinese New Year. Have a good day, and I'll see you at the same time tomorrow.
Henry Morton there in Beijing, getting ready, as you can see by the smile on his face, for a very happy Chinese New Year. Year of the rat, I believe. I'm a rabbit, apparently. Douglas, we don't know what he is, apart from a business expert.
Monkey.
A monkey, apparently. Thanks, mate. Now, before we close this edition, let's take a quick squint at the world's stock markets. US shares closing lower yesterday, extending big losses the day before after a Fed Reserve warning about the potential dangers of inflation, casting doubt on a new Fed rate cut. And this, coming up next, is where the Nikkei in Tokyo is standing at this present moment in time. Those then are the main business stories. You're watching France 24. Stay with us.